Welcome to today's Silver Log. It is the 29th of June, 2011. We'll start this off with another comparison of purchasing power using both fiat currency and silver. This will be the Sports Illustrated issue, and yes, I know you can get cheaper prices by buying subscriptions and well, if you ask them, I want to buy 20,000 of them now, I'm sure they'd give you better than the cover price. However, throwing that aside, since 1970, you've lost about 90% of your purchasing power this way, and in silver, you've gained about 100% on this particular asset class. Well, that's the story there. As far as the silver price is concerned, I've done a little change to these moving averages. Before it was a simple moving average. It's not so simple anymore. It's now a front weighted moving average, which means it's went from having a sideways pattern to that of a sideways one. And the way a front weighted works is it puts more emphasis towards the recent parts. Therefore, say on the close or any of them, the lower the high it takes, its total for this level multiplies it by 18, then 17, 16, 15, and then all the way down to 1. Takes the sum of those numbers, divides it by the total of 171, I think, and well, that's what it comes up with. I think it's more accurate than the simple one, and that's just my personal early thoughts on that for now. As far as what the market's showing us, we've had three early tests of this 32 and change level. It is yet to have dipped below 33, but it wouldn't be a surprise if this was to take place. The Fibonacci from this low and this high on an exponential level is 33.58 exactly, which was a level that it touched again this week, but it has yet to even stay above it. I'm still a little concerned that it will come back down here and then maybe back up to 34 and a half, 35, and then come back. Boom is probably going to be lights out. Still difficult to tell this for sure, but as long as it's above here, it's still not bearish as of yet. But it's really looking as if it wants to put another leg lower. Watch out again for those failed moves. If it comes down towards this area here, and it snaps back pretty fast, then that could be an extremely bullish sign. But that's why a lot of times you just want to adjust to what the message of the market, because it's always ever changing. Sort of like the law of perpetual transmutation or something like that, where energy never stops. Things just keep on moving, keep on happening, if you will. But we are also moving into a positive season. This is the average chart for silver for the year, every year since 1968, and it's the average, not the it's not always going to look this way. In fact, it never really does look this way. But again, average means what the last 70 years, what we've seen on average. I don't need to say much more. But if you were to hypothetically say sell here because on average it tops here and then on average it bottoms here and buy here and maybe even do another sell here, maybe buy again here, sell here and buy here, you'd be doing quite well actually. But just throwing away these even small movements like this, but the big ones, which means you sell on February the 22nd because on average that's when it tops for the year. And then on the year, it's going to bottom on the 30th of June, which is now tomorrow. That's when it usually bottoms. Now, if you were to do this, you'd be doing quite well. We'll get into that in just a few moments. But the dangerous point is you could be doing this back and forth, winning year in and year out, and then maybe next year, sometime in April, the currency crashes and you have only fiat dollars. It can come to backfire as well. So if you're holding a core position for the collapse of the currency, I wouldn't be playing this game, or at least only a small percentage of which. And if you're to do so, this is what your portfolio would look like. Just by buying on the 30th of June and selling on the 22nd of February, and that's all you do. Let's assume you started off with, say, 100 ounces of silver, and at the time it was $200 total because silver was about $2 an ounce. Well, since that period has changed, we've now gotten over $18,000 in value and over 600 ounces. So you've increased your portfolio 500% in silver. And because the prices went higher, then this has even went much higher. And that's another reason why this is in an uptrend making new highs, where this is just consolidating mainly through time because the price of silver has went higher. The big gains is mainly from here to here. Since then, it's been sideways. However, since here, it's been going higher though. But overall, it's hasn't been that great to do this play since here, obviously, since like 1983. Where on the contrary, if you were to do the opposite, if you were to sell your silver, say tomorrow you're going to sell all your silver and then buy it back up on the 22nd of February, you'd be getting crushed. Your original $200 investment would be down to 33 or 34. Your original 100 ounces of silver would be down to 1. Yes, 1 ounce of silver. And the data is this. And we'll look at the earlier parts in here. If you're buying silver at 527 and selling it for 780, you're doing well. Now here you end up buying it for a little bit more than you sold it for. So you lost here. You'd made a nice gain up to 33.20. Huge gain. And it was even at 50 at one point. We know for sure, that silver has the capability of gaining 2, 3, 400% in just a few months' time. It's happened before. It'll most likely happen again. So you see markets up 100, 125% over a period of time and think it's up too much? That's your opinion. My opinion would say no, because I'm looking at data right here. Moving on. You sell at 33.20, you buy at 16.75. There's an easy way to double your portfolio right there. Your portfolio has been doubled simply by just being on the sidelines as the market is crashing. Now you sell for a loss at 1300, which is fine and dandy when you're buying back at 830. Then you sell for a loss at 808, again fine and dandy when you're buying back at 573, selling at 1400, then buying it back again at 1150, selling at 940, buying it back again at 829. This is consistent buying lower than it was before, but it pretty much ended around this point because you're now at the situation here where you sell at 594, you buy at 517. Well, that worked out. You sell at 362, buy 44.45. Well, that worked out. You buy 516. This didn't work out so well, but at least recently here, you say you buy at 1070. Well, you sold at 957 last time, so that did not work out. Then you sold at 1425 and bought back here. That worked out. Sold at 1794, and well, I mean, that wasn't much of a gain. That's break even, we'll say. But 1765 to 1436, and then a small gain here. You go from 1394 to 1644, and then you're back in again at $2 higher per ounce. You lose on that trade because you could have held the whole year. Instead of selling at 1644 and buying back at 1874, you could have just kept it at 1644. But you don't know for sure what's going to happen. You're just playing the system. And then on February the 22nd of this year, silver was $32.89. So here we are tomorrow. Silver's around 34. So you'd be losing on this deal, actually. You would have been better off holding on your silver at 32.89, watching it go up to 50, then all the way back down, but at least higher than where it was in here. Because it does look as if, even though that season's a poor season, it's still going to stay profitable from these date time frames. We go back to that chart. That's not the chart. This is the chart. We go back to the chart. This wasn't the date to sell. It actually didn't work out to February the 22nd. It worked out to the pretty much the 1st of May. But it basically worked out that in February you had a market that looked like that. Plain and simple. And we're now moving into a period where historically markets go higher. Now that's historically, and we'll see how well this plays out. All I want to do is present the data. It's up to you to decide what you want to do with this information. Take care and have yourself a magnificent day. Bye-bye.